Attendees are in listen-only mode.
Welcome, everyone. This is Laura Jakubowski with the Nonprofit Centers Network, and we are about to start our September webinar, Back Office Alternatives, What You Need to Know About Shared Services. It looks like folks are still logging in, but we are going to get started because we have a full agenda. So just wanted to welcome everyone, and if anyone's having problems, just reach out with the question, with the information that you received in your email. Again, my name is Laura Jakubowski. Today I'm joined by Lena Waite, who is our newest addition here at NCN. Katie is actually on the East Coast visiting with one of our consulting clients. So we do, as usual, want to remind you that if you are a member, welcome, and you are receiving this webinar for free. Also remember that you have the online resource center with a lot of different templates and documents that are at your disposal, so don't recreate the wheel. Check out the online resource center. You also receive, as a member, discounts on events and publications, and a free hour of consulting every year. So if you want more information about any of your member benefits, you can email Lena, or always, you can always talk to Katie and I as well. So we also want to welcome those of you who are not members, and we encourage you to think about becoming a member of NCN. It's a great network. We wanted to tell you about an upcoming event on October 5th. And actually, I think October is next week, so that must be next Wednesday. Time flies. We're having our boot camp, and we're doing it a little bit differently this year. We're doing it virtually, so no one has to travel to Denver or to any other location. It's basically a full day of a series of webinars, basically, that we've converted our boot camp curriculum into, so you can learn what it takes to develop and operate a shared space. So feel free to pass that on to folks. We hope you'll join us. So the way this is going to work today, for those of you who aren't familiar with our format, is we have our speakers. They're each going to present for about 12 minutes. We will take questions from you, and what you do is you type them in the screen to the right, and we will see them here, and at the end of the conversation, we will read those off to the presenters that you would like to ask that question to. So if you have any problems, actually email Lena at nonprofitcenters.org, not Katie, but we hope you will share all of your questions or comments so that we can have a conversation at the end. So we always want to sort of start these off with sort of a context setting. We were really excited that our speakers today were willing to share what they've learned, because we've been hearing lots and lots about shared services, both from funders who are interested in these types of organizations in new regions of the country, and also from nonprofits who want to be able to figure out a way to focus on their mission and access higher quality services from providers who are specifically geared around nonprofits and really understand their business. We also heard a lot about this at our event in April, Streamlining Social Good, which was really a discussion around overcoming barriers to nonprofit nonprofit resource sharing. And so I think there was a lot of energy that came out of that around wanting there to be more folks like the three you'll hear from today who are doing this kind of work. So we hope that today's webinar maybe sparks some new interest in providing shared services. We really think it's a very effective way, just like shared space can help nonprofits. We think shared services is another sort of approach to being able to really focus on what you do best and not needing to become an expert on bookkeeping or IT or other things like that. So NCN has put out a couple of publications on shared services. We're looking into funding. We'd like to do some more research on best practices around this. So if you're interested in that, let us know, send me an email. But just to get us started today, I'm going to do introductions of our three presenters, and then they will each make their presentations, and then we'll have our Q&A at the end. So thanks again to all of you for taking the time to be a presenter. Our first presenter today is Andrea Elliott, who's a CPA. She obtained a bachelor's degree in business administration at San Jose State University and then worked in the audit and tax department at Ernst & Young for a few years. She also worked at an investor-owned water utility in San Jose for over 17 years, with 8 of those in the position of controller. She joined the Health Trust in 2008. And is currently the CFO for the wholly owned subsidiary called Financial Administrative Support Services, or FAS for short, and she provides accounting services for other nonprofit organizations. Andrea has also served on boards of various nonprofit organizations, including 8 years as the board treasurer of the YWCA of Silicon Valley. So welcome, Andrea. Second presenter today will be Shelley White. She is a nonprofit executive with more than 20 years of demonstrated successful leadership. She's been instrumental in significantly improving the financial viability and contributing to the growth of each organization she has served. Shelley graduated summa cum laude from Rochester Institute of Technology with a degree in business administration and a major in accounting. After 6 years in public accounting, she joined the nonprofit sector as accounting manager for Conway Hospital, moving into the CFO position, and she's served as CFO of 3 separate nonprofits since '92, and she joined Children and Family Services Center as CFO in 2011, served both as executive director and CFO basically for the last 3 years until I think she got probably exhausted, and so now is serving as executive director and added a CFO, so that was good, and she's joining us from Charlotte, North Carolina. Deborah Box, our third presenter, is Executive Director of Support Kansas City. Her skill set includes organizational and board development, fiscal management, information management, and fund development. She's led Support Kansas City for 15 years, and the agency has grown from providing support to 17 agencies to supporting over 150 agencies annually. She's developed tools to help agencies improve their performance by focusing on their governance and strategies. She holds a BA from the Henry Block School of Business and Public Administration and a Master's of Arts in Human Resource Management from Ottawa University. She has also received advanced board training for consultants from BoardSource. Her board service includes Nonprofit Missouri and the Rehabilitation Institute Foundation Board. So welcome again. We have a great panel, and we are going to just jump into it. So, Andrea, I believe if you can unmute yourself, we'd love you to take it away.
Thank you, Laura. Hi, everyone. I'm going to talk specifically about shared accounting services. And I am getting over a cold, so if you hear me sniffle or clear my throat, that's why. You can go to the next slide. So Financial Administrative Support Services, which we call FAS, is a wholly owned for-profit subsidiary of the Health Trust. And the Health Trust is a nonprofit here in Silicon Valley that has a $20 million annual budget and a $100 million investment portfolio. And FAS is run by the CFO of the Health Trust, Ira Holtzman. He started FAS in 2004 as a program of the Health Trust when an executive director of another nonprofit asked him for help. She had lost her accounting person and couldn't find a replacement, and so he said yes. Today we have about 80 clients who are mostly local here in Santa Clara County, but we also serve nonprofits out of the area. And our clients' budget sizes range from about 100 million to up to 20 million, the Health Trust. And about half of our clients' budget size is between $1 million and $5 million. We have about 30 employees with 16 accountants, and 7 of those accountants have their CPA license. And we have 2 government grant billing experts who each have over 20 years of experience. You can go to the next slide. So the way our model works is we do all of the accounting from our own office, and our model does allow some of our employees to work remotely from their homes. We offer courier service to local clients, and we use electronic transmission of data for our long-distance clients. And we use Blackbaud Financial Edge fund accounting software hosted on our own server. And our employees use remote desktop to work remotely, and we also offer that access to some of our clients who wish to have read-only access to their data in Financial Edge. The fees that we charge are on a monthly fixed fee contract, regardless of seasonal activity, such as, audit season and budget season. You can go to the next slide. So we offer full-scale accounting services customized for each of our clients. We do accounts payable, fee-for-service billing, government grant billing, accounts receivable tracking, functional allocation of labor and non-labor expenses, all month-end journal entries, and monthly reconciliation of all cash, investment, and balance sheet accounts. Our accounting complies with uniform guidance requirements. We prepare 1099s. We support the audit. We support the 990 process. We help prepare the annual budget and report against it monthly. We prepare a variety of financial reports at various levels for the board, the finance committee, and management. We don't charge for setup and implementation, and during the implementation, we set up a new chart of accounts and new processes for our clients. And we offer training to our clients, either their staff and or their board, and we will attend finance committee meetings, audit committee meetings, and or board meetings as agreed upon. What we don't do is we don't do accounts receivable collections. We don't do cash management. We do grant reporting other than providing the numbers. We don't do fundraising, donor database administration, HR, IT. We don't like to do payroll, but we do it for several of our clients, mostly legacy clients. And we don't make assumptions for budgets or forecasts. And we don't prepare the tax returns or do the audits. Our clients engage their own CPA firms for that, and we support the process. Now I'm going to talk about what our clients have to still do, even if they outsource to us. And this can be done by staff who have little or no accounting knowledge or experience. First, they need to process their own deposits. Most of our clients take the deposits to the bank themselves, and then they give us copies of everything. But some prefer to actually send everything to us via our courier, and we actually prepare the deposit and take it to the bank for them. But most importantly, they have to fill out a revenue log that tells us the revenue sources and the coding. Also important is for them to have good internal controls at their office so that one person isn't opening the mail and processing the cash receipts. So we always recommend that 2 people open the mail and they both sign the revenue log that comes to us. Our clients are responsible for their own donor management and donor correspondence. For accounts payable, our clients receive the invoices and they need to code them and approve them. And not only invoices, but check requests, credit card statements, and expense reports. And then they send them to us for payment. They must also code and tell us about all electronic payments so that we can properly record those and do the bank reconciliation. A handful of our clients use Concur or Expensify, to manage the invoice approval process and expense approval process, and then we're able to import that information to Financial Edge. For payroll, the client is responsible for timekeeping, obviously, and most of them for processing their own payroll with whatever payroll service they use. And we tell them that they should have someone other than the payroll person receive and review the payroll reports and the paychecks, to make sure someone else is reviewing that. And then they send the payroll reports to us, and they provide us with their employee allocations. You can go to the next slide. Okay. Our clients are really responsible for their budget. We help them by doing the mechanics and the number crunching, but we can't make the assumptions for them. And we ask our clients to send us all grant awards, contracts, and pledges. When we prepare government contract invoices for them, we send them to the client so that they can review and submit them to the agencies themselves. Many of our auditors have suggested that our clients review and initial their own bank statements. And of course, they need to review the financial statements that we prepare, and they need to prepare and submit their grant reports, and they still need to participate during the audit and the 990 process. And there's other miscellaneous compliance matters that the clients still need to handle that we don't do for them. Okay, so I'm going to talk a little bit about the pros and cons of outsourcing your accounting. There are quite a few benefits of outsourcing to a good accounting service provider. And the first one is better internal controls and shared best practices. Here at FAS, we are audited by several different CPA firms. And if an auditor makes a good suggestion on one of our clients, we implement that on all of our clients. And so as a result of doing this for many years, we have really good policies and procedures, internal controls, and best practices. We have really good segregation of duties within FAS. And then just by outsourcing, that alone gives a small nonprofit better segregation of duties. And with better internal controls, including the enhanced segregation of duties, there's a lower risk of fraud. And additionally, by outsourcing, you've got a third party seeing every transaction. So if we see something that doesn't look right or doesn't smell right, we will question it. Another benefit of outsourcing, at least outsourcing to FAS, is our clients get clean and efficient audits. And more often than not, we can reduce their audit fees from what they were paying before they outsourced to us. Also, by outsourcing, our clients don't have to worry about their accounting staffing. So if their FAS accountant is ill or goes on vacation, there's always someone else here to help them. And finally, there's typically a savings in our clients' cost of their finance operations when they decide to outsource. But there are some cons to outsourcing. It's not for everybody. Many nonprofits still need a CFO-type person for strategic planning, forecasting, managing investments, and helping to make other business decisions. It just depends on the organization, the size of the organization, and what their needs are. Larger nonprofits still have a CFO or a controller and decide to outsource the accounting. And others have a part-time or an outsourced CFO that helps them out when needed. And our clients can always call us and ask questions at any time, and we do our best to help them and or refer them to other resources. Another reason why outsourcing may not be for everyone is that the accountant is not on site. So, if you're an executive director and you like walking around the corner to your accountant's cubicle and asking a question, you may not be comfortable with outsourcing. There also can be delays. We're not available after hours or on weekends typically, and sometimes it takes a day for us to respond. Each of our accountants is handling between 4 and 7 clients and can't necessarily drop what he or she is doing to answer another client's question immediately. So we try our best to respond same day or next day. And finally, with outsourcing, the information is generally not, right at your fingertips. Next slide. Okay. So now I'm going to talk about the benefits and challenges of being the provider of the shared accounting services. And the benefits, the two that I could really, that I could think of, the first one is staff retention. We have had really great success with staff retention, and I think it's because we have opportunities for growth and challenges, and our accountants don't get bored. And, we have a lot of variety in our work. We get to meet, learn about, and help a wide range of different nonprofit organizations, and they all have a variety of accounting issues. And for the most part, everybody we work with are really nice. You know, those who choose to work in the nonprofit world are generally nice people. And so it's just, you know, this is a nice place to work. We work with nice people, and we have a lot of challenges. Another benefit to providing the shared accounting services is a decrease in our own cost of the accounting department. And those savings fund the programs of the Health Trust, and any profits we make also go to the Health Trust to fund programs. But there are a lot of challenges. We have deadlines all the time, especially during audit season. And we do have to deal with client demands, which sometimes can be a little unreasonable. And we are constantly being audited. I myself have already supported 3 June 30th audits so far this year, and we have auditors in our office constantly from August to November, since the majority of our clients are June 30th year ends. And we have auditors here, you know, other times during the year as well. Staffing can sometimes be challenging. We grow slowly by word of mouth, and we add several clients per year. And so we're usually hiring an accountant once or twice a year as we grow, and finding the right person is critical, because in addition to having good accounting skills, he or she needs to be able to learn the nuances of nonprofit accounting and be a really good communicator. You know, we're talking and emailing with our clients all the time, and we need to be able to communicate clearly. I put disaster planning on here as a challenge just because it's critical. You know, if we have an earthquake or a fire and we can't get into our building, it's not just the Health Trust and FAS that are going to be affected. We've got 80 other nonprofits depending on us to pay their bills and get their accounting done. And so we do have a plan in place, and hopefully we will never have to implement it, but it is there. And finally, change is that much harder with 80 clients. So for example, if we wanted to change our general ledger software, we would have to convert all of our clients, which would be a very large undertaking. I have a couple of final thoughts on the next slide. I just wanted to mention that bookkeeping is not equal to accounting. There are a lot of bookkeepers out there who know how to enter transactions into QuickBooks and run reports, but they don't necessarily know generally accepted accounting principles, and they don't necessarily know how to do accounting for nonprofits, even if they say they do. So if you're going to outsource, do some research, talk to your auditors, and get a good recommendation. Nonprofit accounting expertise is a must. That's the end of my presentation, and I've put my contact information on here. You know, any of you feel free to call or email me anytime if you have any questions about outsourced accounting.
Great. Thank you, Andrea. Terrific. Let's switch over to Shelley White. I am going to unmute Shelley, so you should be able to take it away now. Are you there, Shelley?
I'm here.
Terrific. Okay, you should have control of your slides.
Great, thank you. Who are we? We are the Children and Family Services Center. Wait a minute, I'm going to get back on the right screen so I can control my slides. We have a building in Uptown Charlotte. We have 9 partner agency tenants. We also have 2 nonprofit tenants that are market tenants, and 1 law firm in our building. We also have a co-working suite for small agencies or for agencies that have...
Oh, sorry. That was me, sorry.
For agencies that may have a location elsewhere, and they want a space to land uptown, or they're just starting out, so they just need a small space, an office or a cubicle or something like that. We also have CFSC Shared Services, which is our wholly owned subsidiary. We set that up. It's an LLC to protect the building from any litigation that might come about as a result of our providing shared services. All of our 9 partner tenants receive technology shared services, and I'll talk a little bit about what that includes a little bit later. 6 of our partner agencies participate in finance and HR shared services. We also have some agencies that are Hope Work tenants that participate in shared services. We started providing fiscal sponsorships last year. Technology is a full-service technology. We're basically the cloud for our partner tenants and for those other tenants that are outside of our building. We provide all the infrastructure, all of the firewalls, as well as end-user support. For finance, we're very similar to FAS in that we are a full-service finance department. We're a little bit different in that we serve as the CFO and controller for these agencies. So we do provide some strategic consultation to them for their budgeting and for some other things. We use a common audit firm, which helps us a lot. We had 8 audits this summer, and for a small staff, that was a lot. So having one auditor who audits all the controls at one time is very helpful. They still have to audit some of the agency controls around cash receipts and things like that, but a lot of the general controls can be audited one time through CFSC Shared Services. We also provide human resources, full human resources services, including recruiting and onboarding and employee relations,
Muted.
compensation and unemployment claim management. We manage all of our shared services agencies' benefits. The only agencies that actually receive benefits from CFSC Shared Services are those that are partner tenants, and that has to do with Section 414C of the IRC. And so we can't provide those outside of the building, but we can provide those to our partner tenants. And then the fiscal sponsorships are fairly simple usually. We're usually either collecting the dollars and paying expenses for an event or some other similar type activity for an organization that's not a 501c3. They're either trying to get their 501c3 or it's a one-time thing and they just want to raise some money for a specific cause, and we help them do that. Why did we do this? We did this because when we built the building, one of the things the community said was, I think it's great that you're going to share space, but I think you need to collaborate, and you also need to have some shared back office services to improve efficiency and effectiveness of the agencies. So we embarked upon the shared services model. And of course, the other reasons we did this were to reduce risk by improving controls and processes, increase capacity by reducing administrative burden, improve efficiency and effectiveness by reducing costs and increasing expertise and quality, and then increasing transparency and accountability. And Andrea talked a lot about a lot of these things already, so I won't go into a lot of detail about that. So, here. Okay. Sorry, I lost my spot here.
Unmuted.
So how do we do this? I'm sorry. We created the Children and Family Services Center. It came about because a group of executive directors got together. They were getting displaced because Charlotte was growing and they were tearing down their buildings and they were having to move. And so they got together and said, wouldn't it be nice to have some really nice space in Uptown Charlotte near the transportation center where we could collaborate. And so they got together, raised 9 of the $11 million needed to build a facility. Excuse me, and built a building. The building was completed in 2003. We added technology in 2004, and finance and HR services were added for partner agencies in 2009. We added HopeWorks in 2014 and began providing services to the first HopeWorks tenants in 2014, and also started fiscal sponsorship services in 2014. When we created the technology and infrastructure services, we hired a consultant to assist us with that, to assess the needs of all the agencies. We received a Microsoft grant for all of the software, and when we first started our assess the needs of the agencies, we found that only 4 of the 450 computers that the agencies had would actually run the new Microsoft software. So we used some of our funds that we received through the capital campaign to replace everybody's computers so that they could run the software. Shared HR and finance services, we began discussions and planning in 2006 for that. Implementation began in 2009, and we went live in July 1st of 2009. We added benefits later on in 2009. So our structure, we have for the building, we have 1 representative on our board for each partner agency. And then we have an equal number of at-large members on our board. And as I said earlier, CFSC is a wholly owned subsidiary of CFS, or the Children and Family Services Center, and they share the same board. Pricing, IT is for the partner agencies is included in our rent. It's $3.75 per rentable square foot for technology. For the partner tenants, for our non-partner tenants, it's a per user per month fee. And depending on what level of service they get, it's from $75 to $100 per user per month. For HR and finance, we have a fairly complicated formula. We throw all the costs in a bucket for our shared services agencies, and we allocate that based upon the number of employees, the number of transactions, the complexity of the agency, the number of grants. And so for our partner agencies and for those who get full finance and HR services, we use that formula. For fiscal sponsorships, we use an hourly rate for that. Okay, so what challenges did we face when we were forming shared service? I'm going to talk pretty much just about shared services, not the formation of the building. Those are a whole different set of challenges. We found that the agencies had different values, that they didn't place the same value or the same importance on finance and HR services and on the quality of their employee benefits. We found that some of the EDs were a little territorial, and building trust took some time. We found that that the power, whether it was real or perceived, was an issue. Some of the larger agencies were perceived to have more power than some of the smaller, and some of them did. They had more influence over some of the smaller agencies, and so we had to manage that process. We had to manage the executive director's need for control. We had an issue with the difference in agency size. We had agencies everywhere from about 900,000 to about 5 million, so they had different resources to bring to the table. There was some debate over, regarding the cost of services versus having the capacity to deliver the services. Some some issues about getting the agencies to put aside the interests of their agency in order to come up with some common solutions for the good of the whole. We talked a lot about how to define and document success. We had some change in leadership on the boards and in the EDs, and that always creates some issues. And the last thing was making sure that we communicated with the stakeholders, with the boards, and with the agencies and with the agency staff throughout the process. And then the lessons learned, make sure if you're going to do this that you have a true shared vision and mission, that the agencies are really willing to compromise, that they really believe this is going to work. It is a leap of faith, and they need to believe it's going to work. That the amount of time and effort increases exponentially with a number of collaborative partners. Everything takes a little bit longer than you think it will. You'll need a facilitator to help come to common agreements around things. You're probably going to need a consultant because you're not going to have within the agencies everything that you need. The diversity of size and services will create some issues. Need to remember to recognize and celebrate success. All of the agencies involved need to have a commitment to the collaboration. Agencies need to come with clarity and transparency. Everybody's got their own interests and their own agendas, and they need to be very clear and transparent about that. They need to, as I said, have the willingness to compromise, be adaptable and flexible. And you need a carrot and a stick to make sure that they all participate. We ended up, we started out with 8 agencies and created a model around having these 8 agencies. And at the end of the day, 2 of the larger agencies, actually no, wait a minute, 3 of the larger agencies decided at the last minute not to participate, which created an issue with the model. So as Andrea said, if you have any questions, feel free to contact me at either call me or email me, and if you have any questions. Thank you.
Great. Thanks so much, Shelley. I think it's such an interesting model that Shelley has in terms of the involvement of the nonprofits that were in the center in kind of creating the shared service model and, helping to craft or having input into kind of what services were going to be included. And I think I just want to say that because I think it's in contrast a little bit to Deborah's model, which we'll hear from next, and we can go into that a little bit more in the Q&A. But Deborah, are you on the call?
I am. Yes,
okay.
This is Deborah Box. I'm the
Great.
Executive Director for Support Kansas City. And you'll see that picture of our team. We have 21 people on staff right now. The majority of our work, and I'll explain this as we go along, is around the accounting, but we've also have a lot of synergy in the way we share other types of services. And when we were founded exclusively for shared services, and we're truly mission neutral. Our clients have different
Muted.
They're different shapes, they're different sizes, and we've seen over the years how important it is for nonprofits to co-locate. So we do encourage agencies that can get in a shared space situation to do that. And even in our situation, in our building, a space has opened up. Other nonprofits have moved here just to be close to our services. And I apologize, you may hear a little pounding because as part of that growth, there's a little remodeling going on in the building today. So thank you for that. Just some background. As I said, we started in, next slide, would you? Yeah, thank you. We were founded in 2000 by a trust officer at Bank of America who oversaw a number of trusts for Kansas City. And he kept having executive directors and leaders come to him and say, we just can't get all of our work done. It'd be great if we just could get, somebody to do our accounting so we could focus on our mission. So he was instrumental in our founding and providing the startup funding, because our fees are subsidized through fundraising. And you'll see in one of the slides down the road that we're going to show just sort of how that funding stream has changed over the years. We're both a 501c3 public charity, and we're a 509a3 supporting organization. We have client representation on our board, and all of our clients vote for our board members. And our core services focus exclusively on those behind-the-scenes services that are unique to nonprofit. We've sort of taken a direction, even though HR is important, IT is important, that that's not as unique to nonprofit accounting, fundraising, governance, and strategy. So we've built relationships with other service providers to help the agencies we serve find those services. And in the next slide, I have our mission is to provide nonprofit organizations with business and development expertise so that they can focus on their missions. And then our vision is a high-performing, sustainable nonprofit community. And that's certainly a shared vision that we have with other intermediaries in our city. Support Kansas City is a very philanthropic city, and we have other partners that do training and collaborate in other ways. And we certainly have that same shared vision with the funders that want to see the agencies we support succeed. And then in the next slide, you'll see that we've got 4 core services: the accounting and fiscal management. And I could have taken Andrea's slides about what services we provide, what we do and don't do. That's exactly the way we approach the delivery of our services. Some differences in our model is, our clients, their budget sizes tend to be a little smaller than what Andrea had described. And so our accounting software that we use and we have found to be very effective across the board is QuickBooks. We also do a lot of 990s here that I don't think was shared in the other model, but we are not a public accounting firm. We do not do audits. And I think another thing that's different for us is we provide the services based on an hourly rate. We do have a setup fee. We've seen over the years that it's important for agencies to play a role in helping us be effective with our time. And I think having an hourly rate and charging by the hour helps us all be more efficient with the work that we do. Another philosophy we have here is that if we are providing database management, helping with fundraising, assisting with their board trainings and making sure they have a strategic plan, we feel like we're focusing on our vision, and which is a higher performing nonprofit. And by integrating these services, we feel like we're a better value, and we feel like they are a better run nonprofit. Now, do most of the agencies we serve get more than one service? Not typically, but we are seeing that trend increase, and we're seeing our knowledge and expertise shared differently because we're having different types of conversations about the work that they're doing. In the next slide, you'll just see how our growth rate has occurred over the years. When I started in 2002, we had 16, 17 agencies, and the demand for our services has gone up. I think we have several factors that have helped us build our reputation. One is the funder support. They not only support us financially, but they see the value in the work that we do, and they encourage their grantees to use our services. We, in the beginning, I saw board members reluctant to outsource, but now we're seeing referrals from board members who've left one board and go to another board and decide wow, we really like what we saw and we want to have that with the agencies we support now. And I just think the other thing, and I'm going to move along because I know we have not much time. The other thing that we see is our agencies have budget size from 20,000 to 3 million, and our average budget size is about 500,000. So our clients look very different than some of the others that have been mentioned. And again, as I said, they come to us one-on-one. They're through referrals. There aren't any specifications about who they are, what they do, other than they must be a 501c3 public charity. And then in the next slide, you'll see what 2015 looked like for us. We had over 18,000 hours that went directly to support these agencies. We worked with 156 agencies. We also do some work supporting community initiatives around cultural competency and advocacy. And then we've grown also our training and trainings for our clients so that they can, instead of sharing services one-on-one, we can convene a group of clients around a specific theme or best practice. And then in the next slide, you'll see that our staff has grown over the years from the 4.5 in the beginning to 21 active staff members. We have a few contractors that are not included in that count that may help with grant writing or may help with some facilitation. But we feel like we need to invest in our staff. We have the 5 CPAs. We have staff who have their CFRE, who are QuickBooks Pro advisors, and also who have database expertise. And then in this, I mentioned earlier that foundation support has been critical to our model to subsidize our fees and help keep them affordable and help us pay quality staff to deliver the services. So our earned revenue is about 85% of our budget. And early on, the board wanted to set an aggressive target for Support Kansas City and try to get to 85% of earned revenue as soon as we could, and we did that in 2008. And in the next slide, because we're counting on our community, our foundations to support us, so the original funder at Bank of America, we continue to receive some funding, but we also have to receive funding from other foundations. We took a long and analytical look at who we are, what we're doing, what the community needs and impact, and being engaged in conversations with foundations, other providers, board members, client recipients, and developed our model. Pretty much came back to what we were doing was important, the way we were doing it was appropriate, but also looking at expanding some of the collaborative work that we do by supporting the community impact activities, and also providing more education and training. We saw that there was more demand and more interest in our team of professionals who have this unique expertise to make themselves available in the. And then the final slide, what did I wish I'd known when I started this? I wish there would have been more data to support our work and to help us make a case for what we do. In some ways, I wish we'd had a stronger board that understood shared services. It was a small startup board, and it remained that way for several years. And I've seen as our board has grown and included more clients on our board, I think the decision-making process has strengthened. What lessons did we learn? There is difficulty, I think, in recruiting the right staff with the needed skill set and retaining them. We also see, some challenges leadership at the agencies we support, it changes. And sometimes it's harder to get the agencies focus on, what we think would be helpful for them and what they really have time to do. I think it's always a struggle for nonprofit leaders to carve out time, focus on some of their administrative tasks. And
Unmuted.
finally, and what's possible. I think there are opportunities in our area as we've reached our capacity. We do have a waiting list for most of our services. I'm hoping that there might be more opportunities for clusters of nonprofits to share services, and maybe we can play a role in helping them do that. I've also seen how helpful this can be for nonprofit boards when they lose a leader or an executive director loses a key staff person. They can rely on our team to help them. And I have my contact information. Happy to supply any additional information.
Great. Thank you so much, Deborah. And thank you, Andrea and Shelley. This has been great. We have a number of questions. I'm going to switch to our questions page so you can see who you're asking the questions of. Let's start with the first one is really for all three of you. And I think, Deborah, you really kind of answered this in terms of your financial model. But so maybe we could start with Andrea and Shelley. The question is, could the panelists talk more about their financial strategies for their shared services? Are the services planned to be financially profitable, break even, or offered at a loss? So Andrea, maybe you could start us off with that.
Sure. We try to make a profit, a small profit. We can't lose money because we don't have external funding. Our model is completely funded by fees. We do try to keep our fees as low as possible, and but we still need to pay our staff, obviously, and reward them, and it's a balancing act.
Okay. Shelley, do you want to chime in on that?
It's the same case for us. We try to make a small profit, so we'll have some dollars to invest in infrastructure and technology. But for the most part, we try to keep the fees as low as possible.
Oops. Were you hearing that? Okay. Shelley, I'm sorry. You might have to answer that again. I think I still had you muted, so I was hearing you, but everybody else wasn't. Sorry.
Okay. Our situation is similar to Andrea's. We try to make a small profit so we can invest it back into infrastructure and technology, but we try to keep our fees as low as possible.
Okay, great. And maybe just going back to Andrea for a follow-up question on this, since it seems like that FAS is kind of a social enterprise of the Health Trust, have there been discussions over the use of resources? Like, I mean, you sort of mentioned that you're wanting to generate, a net revenue to go back to the Health Trust, but how do you kind of have those conversations around maybe needing to do more investment in staff training? Like, is there kind of a formula, or is it just kind of an ad hoc thing that you decide in terms of what goes back to Health Trust?
There's not really a formula. I mean, well, there's actually a formula for shared services because we share space with the Health Trust. We're a separate entity. Before, when we were a program of the Health Trust, we were just basically covering overhead of the Health Trust by, the fees that we were generating. But now that we are a separate entity and we're a for-profit entity, we have to be very careful about, doing everything correctly in terms of accounting and tax purposes. And we have a shared services agreement between FAS and the Health Trust. FAS provides the Health Trust with back office accounting services, and the Health Trust provides FAS with, our space and our IT and our HR, et cetera. So there is a formula to that, and our CEO, Ira Holtzman, who is also the CFO of the Health Trust, manages that. But
Okay.
like I said, we definitely need to cover our costs and be able to pay our fair share of everything here.
Sure. Okay, great. I want to get to some more of these questions. First of all, I'm sorry I forgot to mention that we will be sending everyone copies of the slides. You also will be able to listen to the recording of the webinar. So next question, and this I think is for all, but maybe we could start with Deborah. Do you use a specific software, or do the clients each do their own analysis of their impact? So I think you mentioned that you use QuickBooks. Do you do, I'm not 100% sure of what we're talking about in terms of impact, but do you want to talk a little bit more, Deborah, about any of the software that you use?
We do use QuickBooks almost exclusively for the accounting. For the database management, we use Salesforce a lot. That's available for those of you who don't know. Most nonprofits can get that at no charge by applying. And then for some of the impact work, I think in the strategic planning, we really have a lot of that set up in templates in Excel and a dashboard generator if they're looking for those kind of metrics. And yeah, so those are really the three go-to tools. I do think that it's always a challenge to stay on top of what software is out there. We've been exploring the Tableau and some things like that, and we also use a project management software internally to schedule between our team, and that's Asana.
Great. And Deborah, there's a couple follow-up questions or related questions. How do you maintain proper amounts of contribution revenue versus earned income so as not to compromise your nonprofit status?
I think 15% is the threshold that you want to make sure you raise at least that much. So we take a look at what the market bears. We not only have to be below market, we have to be below our costs. So we are taking a look at that and reporting that on some of our dashboards internally to our staff and our clients. So keeping a sharp eye on the hourly rate and what you're charging so that you can demonstrate you really do bring value and you bring unique expertise. And I think also the fact that we have a variety of services, it's an integration of services, makes us different than a public accounting firm or consulting firm.
Okay, interesting and great question from the audience. Shelley, have you had to struggle with this at all, the maintaining contribution revenue versus earned income in terms of your nonprofit status?
Yes, that's one of the reasons that we decided to embark upon the fiscal sponsorship is that because we are the 501c3, we get to count those contributions toward our contribution percentage, so that helps us some. Otherwise, we'd be out fundraising.
Okay.
Because we do have to maintain that contribution rate.
Okay. And one last question, because I know we're getting close to the end here. I'm trying to decide which one to do. I'm interested to learn more about what fund development looks like at Support Kansas City. Is there a conflict of interest in supporting multiple nonprofits in the same geography?
Oh, that's a great question. One of the things we do, that's one reason we have contracted grant writers, because occasionally we will have clients who are going after the same funding, who may have similar missions, and the relationship with our staff to keep that less of a conflict, we'll pull in an independent contractor to do that grant writing for them.
Okay. Interesting. And then my one last question, just quickly, it sounds like all three of you like each of your accountants on your staff maintains a portfolio of maybe between 4 and 8 clients. I just wanted to confirm, is that about right? And I guess I'd like to end with each of you giving sort of, you can confirm kind of what their portfolios look like, as well as if you were looking at starting a shared service organization, what are your top 1 or 2 tips for getting started? So Andrea, maybe you could start us off.
So yes, each of our accountants has between 4 and 7 clients, depending on the size of the clients and when they need their financial information. You know, if all 7 clients needed their financials by the 15th of the month, you know, that would be impossible for one person to do that all in the first 15 days. So we have to, you know, that's one of the challenges, is figuring out what's a good workload for each accountant and how they can get all of their closes done in 1 month and satisfy the timing requirements for each of their clients.
Okay.
And then the challenges of getting started, you know, we just kind of fell into this. We had really good people and systems here at the Health Trust, and we just leveraged that. You know, when the first nonprofit came and said, hey, you know, can you help me out? We had the people and the systems here to do that, and so we leveraged that.
Okay, great. Shelley, did you want to give a couple closing thoughts?
Sure. We have one CFO who's responsible for all of our agencies, and then we have 3 controllers that share 11 agencies. We have 2 staff accountants that provide the lower level, the journal entries, some of the account reconciliations, that sort of thing. The controllers do more of the analysis and that sort of thing. And we have the staff accountants also do payroll, so the staff accountants are each doing 5 or 6 payrolls every 2 weeks. And then we have one accounts payable person who processes the payables for all of the agencies. And then the challenge, I would say, is the funding. We were very fortunate to get a grant from the Duke Endowment to start shared services. We would not have been able to do it without that.
Okay, great. And Deborah, 20 seconds to wrap this up. I know we're going over time, but love to get your last thoughts.
We have a higher average client base per employee. They have closer to 10, but that's, you know, we have smaller agencies that we're supporting, probably fewer last transactions. But it is true, you've got to be careful. They're not all trying to close at the same time and get their financial reports out. And then I think the one thing that was really helpful that hasn't come up yet in getting started, not only did we get funding for our services, we had funding for our proposals so that our clients could get grants to use our services. And that certainly helped us build our referral base.
Interesting. Okay, great. Well, I want to do a quick shout out to the Canadians on the call. I know this panel was pretty US based, and I'd be interested in hearing, I know a little bit about the shared platforms that are being developed in Canada, but would be interested in your thoughts if there are some good examples that maybe we could do a follow-on. Given the interest level in this webinar, we'd be happy to do a part 2 in the future. And likewise, if you have thoughts or areas that you wish we had drilled down more on in this webinar, please send them to us so that that really informs sort of where we take webinars in the future. I want to go back to Deborah's point in terms of wanting more data to make a case for shared services, and that's what we hope to do. So if anybody has any ideas about folks who are interested in this topic, please also be in touch. We'd love to, like we said, put out another publication on this and kind of advance the collective knowledge around best practices. Last reminder, if you're interested, you can still sign up for boot camp next week. Our next webinar is scheduled for October 20th. This is going to be a follow-on to the Streamlining Social Good presentation in Philadelphia. We had an event there. You'll basically get everything that we learned in Philadelphia in an hour from Sion Benot, who was wonderful. So please join us. It's really going to deal with sort of why folks don't take on more resource sharing. So a good follow-on to this webinar. Here's all of our contact info. As I said, we will be sending out the slides to everyone, and the recording will be available on our website in the next couple weeks. So stay tuned and do be in touch, and I hope everybody has a wonderful day. Just want to thank again Andrea, Deborah, and Shelley for taking the time. I thought this was just a great, so much information, and we appreciate everyone being part of it. So thanks again. We will see you next time.